Welcome to Charts Today. My name's David Linton, and today's edition for Thursday, the 24th of November, comes to you from London. And there's been a lot of talk about yield curve inversion lately, and so I just wanted to talk a little bit about that and what it means for markets. So basically, you in Updata you can easily do this. You just take the 10-year US yield curve and the 2-year US yield curve, and you just create a spread between the two, and then you can right-hand click on that chart and make it your own custom ticker chart. So that's what I have here. I have a yield curve spread, and so what this tells us is that the 10-year yield is now lower than the 2-year yield. So that's very unusual. Just basically we're saying longer term money is cheaper than shorter term money, and so that normally heralds fear in the market and we get recession. So that's where we're at the moment, and we're at levels we haven't seen really since the beginning of the decade, the beginning of the millennium really. We've gone lower than we did in the financial crisis in 2006-7. We saw that yield curve go negative, which then led to we saw the financial crisis soon after that. If we go back to 2000, that's when we had the dot-com bubble and burst. We can go back to the early 90s, where that was quite recessionary in the early 90s. And then, of course, the mother of all recessions was back in the 70s and early 80s, which led to massive inflationary pressures. So really quite interesting to see just how this yield curve, and that's what's got markets worried at the moment. And of course, and people have asked me, how do I put the flags behind the chart? You just do that in your drawing tools in Updata, and there's a whole series of flags, and you just put them behind the chart. So, and then you can watermark them so that they behind the chart. A lot of people like that. So just looking at the yield curve, straight away I want to do some analysis on it, and because I've now got this as a chart, I can actually just do the analysis. So one of the things I'll be watching for is when do we actually go back above the cloud. So that is the beginning of that deterioration in the yield curve spread changing. So I'll be watching out for that. And of course, you can do that in your system. And I think this emphasizes the power of doing your own analysis. There's nothing quite like just playing with the charts yourself and arriving at your own conclusions rather than just all the noise that you read and hear in the market. And of course, then what we could do, we could just press the T key, and that's going to give us a point and figure chart. So we're seeing how those targets were given. So a target was given, then it was met. This is on the spread itself. The target was given, and then it's met, and we got a new target suggesting that the spread is going to go lower still. And of course, I can change the box size. So there's a couple of targets there pointing lower. So it's telling us that this move in the curves is effectively resolving the two different charts, and it's telling us that the moves, we're going to see long dated money either get cheaper or short dated money either getting more expensive. That's what's driving the yield, and you could do the individual analysis on those charts to assess that, but here we're just looking at the spread, and so I can keep doing that. And you'll notice this is going back really to back into the 90s, and we can see how these targets have been met. So quite an interesting idea there that you can play with the yield curve, but that's what's got a lot of market watchers worried at the moment, that yield curve is negative. And we'll take a look at the yield curves in a minute. But looking at the market generally, we've got the dollar. It's still bearish below the cloud on the short and medium term time horizons. Interestingly, we found some support there for the dollar. This is the weekly candle here, and we are just seeing now we're going lower. Now, of course, it is Thanksgiving in the US today, and markets are generally fairly quiet tomorrow. Black Friday, the bridge day between the weekend and Thanksgiving. So no big surprises that we will see markets quieter today and tomorrow. But the reality is this fall in the dollar, we haven't seen a bounce back, really suggesting this trend is over for the dollar, and we are seeing the fact that we are below the cloud and now coming back to test that low that we saw recently, this 105 level now critical. 110 was the level that we really saw support on. We talked about that with clients. Now it's 105, and of course that means that other currencies, we're seeing sterling, for example, sitting at 121, so really pushing much higher now, so that is good news. I was pretty heavily invested in dollars myself all through the year. We said that would be the year of the dollar, and converted back into sterling recently, because really this change was just too so it didn't pick the bottom, but it's picking that trend change. So we're seeing sterling now really starting to appreciate there. So that's quite interesting. Longer term, we do have the long-term target still hanging over us, but we're seeing that for the medium term, it's back to dollar weakness and these other currency strengths. So we look at the euro, we're sitting at 104.25. We had that target to 107. We'll have a new target pushing there. So again, we're seeing that euro strength kicking in. So it's really quite interesting. And looking at sterling against the euro, we're seeing that strength also just showing through, sitting at 116 this morning, just above there, and so pushing higher there as well. Bitcoin is sitting at $16,500. We've had a little bit of a recovery there, but of course the trends are unchanged. We do have these downside targets that have been activated, so that is quite key for Bitcoin. US markets closed, of course, with Thanksgiving. We are seeing the futures still open there, and quite interestingly, the markets there and the futures will be, but the main markets will be mostly closed for Thanksgiving. Looking at the FTSE future, we're up slightly there this morning, looking very different from the US markets, really bullish on all three time frames, not what you'd expect, but the oil majors driving that in the UK. We've got the DAX in Germany higher, and most Asian markets up. Japan really starting to really motor. We've been talking about that in recent days and pushing higher there. Just a look at other markets. We've got gold up 0.5%, so that's quite key. And of course, we mentioned 10-year yield sitting at 3.7%, so they have pulled back there. So that longer dated yield pulling back faster. A quick look at the energy mix now. We're seeing a lot of red on the screen this morning, so that's quite interesting. Crude oil had big falls yesterday, and we're seeing a lot of volatility entering in the short term there. We're still bearish below the cloud, and we've got these downside targets, so that's quite key. Looking at US nat gas, above $7, so that's been pretty good, but we did have the downside targets, which put us out to neutral to clients this morning in our reports, and we are seeing gas markets just pulling back. We were neutral on TTF because we did have these downside targets, even though we're above the cloud. MBP was looking a little bit better, but again, we're seeing these downside targets now creeping in, and that's why you've really got to watch those throughout the day, so it's really quite key there. And if we look at German power, that's pulling back as well. But of course, the key thing is that we are seeing this change in trend. So that's quite critical as well. But for markets today, we're going to be pretty quiet through Thanksgiving. But really keep an eye on those 1 minute targets if you're trading short term. Until tomorrow, happy charting. And to all my friends and colleagues in the US, happy Thanksgiving. Enjoy the holiday. Bye for now.